Hey everyone, welcome back to Corporate Decoder, the place where we take a look at how companies are doing, and this time we're diving into Iveda Solutions. And let me tell you, their annual report is like a choose your own adventure. Will they make it or will they face some tough times? Let's get into it. Okay, so first, who is Iveda Solutions? Well, it started way back in 2006 as Charmed Homes, a home construction business, but they later shifted into video surveillance and smart city technology. In 2011, they bought a Taiwan-based company called Iveda Taiwan, which became a big part of their business. The company changed its business model to sell hardware and software to service providers instead of direct sales. Also, on March 14, 2021, the company moved to Delaware with shares of stock available. Iveda is betting big on smart city tech, things like AI-driven video and the Internet of Things, or IoT. Verified market research says the smart city market could be worth over $416 billion to double in the next few years. This industry is expected to surge from $381.30 billion in 2021 to $1,000 billion in 2021 to $1,854.76 billion in 2021 to $1,080 billion to $20 80 billion video by $20 $80 billion in 2021 to $1,854.76 billion is about to double in the next few years. This industry is expected to surge from $381.8054.76 billion is about to double in the next few years. This industry is expected to surge from $381 to $1,085.70 billion we're going to 2021. Let's look at their tech a bit. They've got Iveda AI, which is video analytics software that can find objects, faces, and even read license plates in videos. Also, there is Cerebro, which is a software platform that helps manage different city systems from one place. They also offer other things such as smart power solutions and smart poles with Utilis. Then there is Vermistar, which is AI software for measuring chemical levels and helping out with manufacturing. It is sold as a license per device with a monthly subscription requirement for cloud access to trained AI models. Finally, they have Iveda Express, which lets people use AI on their existing cameras without needing big servers. Then there is Vimo, a body camera that streams live video and can be used as a walkie-talkie, and ID Care, which is tech for keeping an eye on elderly family members from afar. Also, there is Level Now, an IoT-based solution that transforms the way liquid levels are monitored and managed. Know exactly when customers are running low and deploy fleets in real time to refill your liquids. Now here's a key point. A small number of customers make up a big chunk of Iveda's money. For 2024, 5 customers made up about 67% of their total revenue. One specific customer, Chungof Telecom, makes up 18% of their revenue. Also, Iveda Taiwan brings in most of the company's money, 85% of their total revenue. Okay, so the business is currently not affected by environmental regulations. As for employees, they have 7 full-time employees in the US and 25 in Taiwan. As always, there are risks. First, the report notes the financial statements have a going concern opinion, meaning there's doubt the company can stay afloat. They've had losses and need more money to keep going. They've had big losses since they started and might not make a profit anytime soon. What else? They depend on key people, and if they leave, things could get rough. Demand for their products might not be as high as they think. Also, they believe trends support their open source systems, but this might change. And as usual, if their security measures are hacked, people might stop using their software. Also, there can be issues involved with Taiwan where the company depends on the subsidiary located there to obtain a good chunk of their revenues. How is the company dealing with cybersecurity? They don't have general processes for assessing, identifying, and managing material risks from cybersecurity threats. However, they plan to do so as they expand. As of December 31, 2024, there were 8,171 shares of their common stock issued and outstanding. There is limited trading activity in their securities, and there can be no assurance that a regular trading market for our common stock will be sustained. Let's talk numbers. The company recorded net consolidated revenue of $6 million for the year ended December 31, 2024, compared with $6.5 million for the year ended December 31, 2024, compared with $6.5 million for the year ended December 31, 2023. Loss of revenue was $4.23. The loss from operations was $4 for 2023. The loss from operations was $4 what a gross $4.7 million for the year ended December 31, 2020 for $4.74, compared with $5.4 million for the year ended December 31, 2023. The loss from operations was $441.3. The loss from operations only $4, compared with $5.4 million for the year ended December 31, 2024, compared with $5.4 million for the year ended December 31, 2023. These numbers show a decrease in total revenue, a decrease in cost of revenue, and the off-fiscal year ended December 31, 2023. These numbers show a decrease in total revenue, a decrease in cost of revenue, and the offsetting amount in net losses were prior for 2020. The cash and cash equivalents were at $2.66 million as of December 31, 2024. This decrease in their cash and cash equivalents is primarily a result of the cash used in operating activities of $4.4 million during the year ended December 31, 2024. They have limited liquidity and have not yet established a stabilized source of revenue sufficient to cover operating costs. Because of that, their continuation as a going concern is dependent upon their ability to generate greater revenue and/or their ability to raise additional funds through the capital markets. Payment terms for our US-based segment require a deposit with the order and 15 days after they are shipped. Delinquent receivables are written off based on individual credit valuation and specific circumstances of the customer. Alright, now who's getting paid? The chairman and CEO, David Lai, made around $224,953 and $954, $998,367. The company has a stock option plan as of the report release date. Many of these people had thousands of unexercised options with prices all the way up to almost $130. All of these have a price of $3 or $4 now. This makes it harder to attract employees and retain existing employees. Looking at equity compensation plans, there's one that allows the board to grant options to purchase 200 and 125 shares of stock. Also, the 2020 plan has a maximum of 156,250 shares. In 2024, the company paid or accrued $283,000 and $137,500 for audit fees during the year ended December 31, 2023, respectively. That's a pretty big jump in fees. BF Borges, who were the principal accounting firm for the company for a certain amount of time and was paid $93,500. Then they hired Crite and Choose CPLT to re-audit things and paid them almost $119,000 before replacing them with Weinberg. This makes it difficult to assess reliability of filings. So, what's the big picture here? Iveda Solutions is in a growing market, but they're facing some serious challenges. They need to become profitable and find stable sources of revenue. They also need to manage those cybersecurity risks and keep their existing customers happy. Their focus is on smart city technologies. However, those are still not resulting in consistent revenue. They also need to attract talented employees. This last point is a potential red flag, because if I were to work at Iveda as a talented employee, then I would not want to accept mostly stock as my form of compensation, since I'm not sure what it will be worth in the future. So for a turnaround, they should look into setting more reasonable performance targets and paying more cash in salary. Thanks for watching. If you enjoyed this episode of the Corporate Decoder, please subscribe and comment.